what's really starting to push the market down, and a lot of stuff happened this week. Manufacturing plunged and reinforces the need for the Fed, for further Fed action. So let me explain to you what the Fed's job is. The Fed's job is to look at jobs, is to look at the economy, not the market, but the economy. And right now, globally, there's a recessionary feel in markets globally, where our market here in the United States is still doing well. But if the global market is getting close to recessionary and we are still doing well, what does that do for our dollar? It makes our dollar stronger. If our dollar is stronger, it causes people to spend more money to get our products, right? So keeping that in mind, the story talks about the need for the Fed, further Fed action. Keep in mind, what does the Fed do to help the economy? It either lowers or raises interest rates, right? When the market is doing well, they raise interest rates to make sure that inflation doesn't get out of hand. When the market is rampant, the market is going up, or price of goods are going up because more and more people, we're making money, we can spend more money and inflation will go up. But when inflation hits to a certain level, the Fed jumps in and says, all right, we don't want rampant inflation, so we're going to raise the interest rates to slow the economy down. Well, what has the Fed been doing recently? Lowering interest rates to keep the economy, and it's going to keep spurring on the economy so that we don't fall into the whole recessionary global idea. He says, thanks. Paul says it ignores Trump. Remember, in here, I don't talk about politics or religion unless it affects the market. And all it takes sometimes is a tweet from our president that can move the market on a dime. This is a very news-driven market. All right, good afternoon, Alessandra. I'm glad you're here as well. All right, so keeping that in mind, the drop in the headline ISM Manufacturing Index is a huge surprise. Last month, the ISM was significantly undershot relative to the regional manufacturing indicators. We think the Fed will provide further insurance, in quotes, interest rates cuts to try to limit the slowdown of the overall growth. So as Alessandra has typed in the room, she is from the Dallas User Group. I don't know how many other people are here from the Dallas User Group. But if you want to chat in, say hello. All right, say hello. I say thank you to everyone who's here. So let's talk about the manufacturing report and how it affects the market. Let's go back into the software. All right, so the two indicators that I'm going to use to see if that manufacturing report is affecting the market, two indicators. One, most people in here will use the SPY as a gauge of what the market is truly doing and if their portfolios are outperforming the spiders. So I'm going to put up the spiders. Because it's an ETF, the relative value and the relative safety on those on that ETF is not going to show much of anything, but what's going to be important is the RT. RT looks at the short-term price trend of a stock. Above 1, the stock is in an uptrend. So currently the spiders are still in an uptrend above the value of 1. The CI of the spiders, which is the comfort index, is above 1, and the VST still has a combination of above 1 as well. Karen says, hello, I'm here enjoying the program. Thank you for that, Karen. I appreciate that. So let's go graph the spiders. We'll right-click, view the stock graph. And here's the spiders. So the market overall, this is looking at the S&P 500. And we could see that it was, along with the VectorVest Composite, as we'll show in a second, nicely rising, pulled back a little bit, found a level of a floor, a level of support, rose again, found a high, and right now it is approaching another level of support on the spiders, which looks at about, let's go right about here. A good level of support on the spiders is sitting at about, let's go make that a little darker, sitting at about 283.81. So a nice bounce today on the SPY. I have the 3 and the 8 exponential moving averages, a good way for a short-term investor or trader to get in and out of the market based on the SPY. All right, and look at that nice rebound today. Let's put this on a 3-month graph. Nice rebound today, piercing pattern. Let's go see if it's a bullish reversal coming off of this level of support in that zone. Beautiful level of support. Tom, you know this stuff really works. All right, this stuff really works. And let's take a look at the VectorVest Composite. All right, that's another indicator which looks at the over 8,300 stocks that we have. Let's take a look at that. Again, same kind of scenario. Earnings per share. How about the earnings per share on the composite is on the rise? All right, the 3 and the 8 did cross bearish right at a level again of support. Let me go draw this line here. And on the VectorVest Composite, the level of support is sitting at the price of about $45.96. Nice long wick at the bottom of today's candle. This is actually, looks a little bit like a bearish harami, just barely, as a nice open candle. Open candle, it's green because it's higher than the previous day's close. A lot of buying pressure with a long wick at the bottom of the body. Is it time to buy stocks yet? Not yet. One day does not make a trend. So the stock or the VectorVest Composite is up today. The movement of over 8,300 stocks is up today, but not ready to still say it's okay to go full bore and buy stocks. Now, if this is a bearish harami, how do we know if it's confirmed? We have to look at tomorrow's activity to see if we still have continuing rise from this candle from today. So this is where we stand. The ISM report did pull the market down. Impeachment inquiry to the president did pull the market down. But now let's see if the market has enough blood in the streets coming off of this nice level of support to see if it can bounce and rebound once again. And that's right, Tom, this stuff really works. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.